We're going, we're good. Make sure we chilling. And pull the chat up so I can see what y'all saying. Yo, if you're not following the stream, highly recommend you follow. I'm probably gonna start streaming a lot more. Whether it be stocks, I'll never be live trading on here. I'll be live trading in Discord. But I'll be doing this a lot more often. I plan on doing this at least once a week, every Sunday. I know Mark's not open tomorrow. I did plan on pushing it back to tomorrow, but because it was going to be last minute, may as well get it over with. This will be recorded and posted on YouTube, so ask as many questions as you can. I want this to be as personal as possible, right? So I want everyone, if you have questions or you're struggling with a certain subject or topic or whatever it is, ask that question. You might have the same question as someone else, so it only helps everybody out. The same concept applies in school, right? The dumbest people think they know the most. The smartest people ask the most questions, right? So feel free to ask as many questions as you want. Just go crazy. But we're going to start off with the basics. Number one, if you're a complete beginner, I highly recommend Webull or Thinkorswim. In my opinion, Thinkorswim is a lot better than Webull. The only reason I use Webull is because before they didn't charge fees when trading SPX or SPY. Now they charge fees. In that case, Thinkorswim would be the better option because they both charge fees. But it's all personal preference, right? So Webull is like easier to manage. The user interface is a lot easier to understand for beginners. Thinkorswim is more advanced, but I've been using Webull forever, so I'm just going to stay on it. Thinkorswim is really good, though. Charts are a lot better on there, but you can chart on anything. We use TradingView, so it doesn't really matter. But we're going to start off with the very basics, right? We're going to go over a bunch of concepts that you need to know. Right, so let's go to larger time frames. A lot of you guys know resistance, but we call resistance support levels. But we're gonna just call them levels, and I'm gonna tell you what makes it a resistance and what makes it a support. Right? Thoughts on indicators? In my opinion, the only indicator I'll use, I know I have the 21 EMA here. I never use it. I used to, I don't anymore. I only use volume, right? So I'll read volume. I'll cover that as well. Also, excuse me, I have allergies. That's just been killing me all weekend. But we're going to get through this, right? So the first thing, the most basic thing you have to understand is a level. What is a level? A level is where price rejects or bounces repetitively, right? So it's going to be where prices, selling off or buying into, right? So here on this level here, you see several sell-offs. This is a simple resistance. It's called a level. The reason it's a resistance is because price is under that level. That's what would make it a resistance. Say price breaks above it, it now becomes a support. Like there, right? So if I zoom out, you can see that price broke this resistance level, bounced, and it became a support. That's the reason we call them levels and not necessarily resistance or support. But if price is above it, it's a support. If it's below it, it's a resistance. Super simple, right? So that's one concept to understand. And I'm going to cover a bunch of different things like supply and demand, fair value gaps, and levels are going to be, used across the board. Doesn't matter what strategy you use. Levels is just a term to indicate like, oh, this is where price is rejecting or this is where price is bouncing, right? So that's what levels are. Simple lines like this are just to mark where price could pivot, right? So they're used as pivot points, not necessarily used to make trades, right? So where would you mark your levels? Your levels, you should always mark them on larger time frames. Another simple concept. The larger the time frame, the larger the level, right? So if we're coming down and we break this weekly resistance point, if we break that weekly resistance point, you can expect a larger bounce or a larger move to the upside once it retests on this support, previous resistance, now support. because it is a larger level. So the further you move down into smaller time frames, you could do the same thing, right? But it's going to be a smaller move compared to like the weekly, right? So here we broke this resistance. I think it was a previous break of structure here. You see a level there. Price was rejecting. It retested, and then boom, made a smaller move compared to like the weekly. So you look bigger time frames and enter trades on smaller time frames like 5 minute. Yeah. So I look at larger time frames for pivot points, and then I'll move into smaller time frames so I could get entries. So that's just one simple concept. And then currently we're in an uptrend, right? So this is one thing you guys have to understand. When the market is going to the top right corner of your screen, right? If the market is moving to the top right corner of your screen, why would you want to take puts, or why would you want to trade the downside? One second. Dying over here. It's gonna be tough getting through this, but we're gonna do it. So what I'm trying to get at is you don't want to fight the trend. If the market is moving to the top right corner of your screen, it's more than likely gonna bounce a lot stronger to the upside than it is to sell off. In this case, yeah, I'm chilling, bro. I got allergies. But there will be times where we start, retracing. Say we break out a level and we start retracing, it's gonna go to the bottom right corner of our screen. If it's downtrending, play the downside. If it's uptrending, play the upside. Right? Super simple. And then last simple concept before I start getting into strategies is, an uptrending market versus a downtrending market. And then how you can tell when it's going to go up and when it's going to go down. Can you cover your chart settings? Can wait till later, just letting you know. Yeah, I got you, bro. Here we go. Boom. So look, this is an uptrend. When you're making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. This is an uptrend. Boom. Higher highs, higher lows. Simple, right? It's going up. That's an uptrend. It's going to the top right corner of our screen. This is a downtrend. When you're making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. What makes it an uptrend? When the highs break previous highs and the lows break previous lows, right? Downtrend, you got lower highs, lower lows, and the highs are lower than the previous highs, the lows are lower than the previous lows. Super simple. And then now, I'm glad you asked, how do you identify a break of structure? This is how you do so. When the market is uptrending and it breaks structure, this is all it is when the market goes from making higher highs and higher lows into making lower highs and lower lows, right? So if we break a previous low, that would be your break of structure. And this would be, your retest or entry point. And I'll show you guys how to correctly find your entry and how to, get confluence, fair value gaps, supply and demand, several things that I'm going to show you guys so that way you can understand how it works. Right? And then the same thing to the upside or downside. If we're downtrending and then all of a sudden we break a previous high and going into an uptrend, that would be your break of structure here. As soon as you break a previous high from a downtrend and go into an uptrend, that's your break of structure. Oh, excuse me, guys. Right? So let me give you a clear example here. Can we still trade on bad news if we give an A+ setup? Yeah, I'm going to cover that as well. There's no such thing as good or bad news. You should never create a bias off of news. You know what news does? News brings volume, right? So big money, banks, hedge funds, all this and that are waiting for news so that way they can see what's going to happen in the market. They decide what the market wants to do. We don't, right? So why would we have a bias? There's no point in us having a bias if we can't control the market. You have to have hundreds of millions, billions of dollars to control the market. So why have a bias? There's no point. The only thing it does is bring volume, right? Any type of news, any type of catalyst. I'll go over where to look for news here in a second. But first, let me stay on the topic of breaker structures. So here we have a clear downtrend, right? Let me go into the 4-hour. We have a downtrend, so let me draw it out for you guys. We have a high, we have lower, low, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and then we have a high there, boom, and then we have you see we created a higher low, so we didn't make a lower low. That's a sign that market wants to start reversing, right? And then all of a sudden we break this previous high, we break structure, boom. So that's a breaker structure there, right? And if we're overall uptrending, you want to wait, you always want to wait for the retracement, right? Mercy, what you doing? Hey, quit doing that. Right? So there's your breaker structure. Now, if we go into the 30-minute, we're moving into smaller time frames. Use larger time frames to find your breaker structures. The moves are going to be a lot stronger. Like I said, the larger the time frame, the larger the move, right? So here we had our breaker structure. We broke from a downtrend into an uptrend. And on the 15-minute, if you guys don't know, we have 15-minute demand. The way you find demand on the chart-based definition is a rally-based rally. So you have to have volume, of course. Usually when you break previous highs from a downtrend, you're going to have a lot of volume. You need volume to break previous levels, right? So this is what supply and demand looks like. This is demand, a rally, a base, and then a rally, right? This is what it looks like here. Oh. Rally, base, rally, right? And all it is when the market rallies, it bases out for a little bit, like consolidates, and then continues moving higher. And then obviously we need a lot of volume for it to break out, right? And I always like using the candle that starts to move. The reason I selected this candle here is because this is the candle that initiated that breakout on that breaker structure, right? So this is the candle that started the move for me, right? So now we just have to wait on a retracement. There's another example for supply. You could use any time frame for supply and demand. It works perfectly, right? I'll show you guys Tesla as well. It was a demand play. But here you see volume. You see these large candles. I wouldn't count stuff like this, like these little baby candles. I don't count that as supply because there's no volume. If you pull up the volume here, you can see, large volume at market open. That's what you're looking for. Or candles like this, right? But then you could always find shit like that where it invalidates. But let me show you guys what I see. Where is the path? There we go. So we have a drop, a base, drop. This is supply. Demand is to the upside, supply is to the downside, right? So we have supply. We have a fair value gap here. A fair value gap is when you have a displacement, right? So a displacement is when either buyers outcontrol the sellers or the sellers outcontrol the buyers. And the way that happens is when it's super simple. When this candle doesn't touch the candle before this candle, so this candle and this candle here don't touch. There's a lot of volume here on this candle. So that's a fair value gap, right? And you can take the trade off of that. Tesla on the 1 hour We had a break of structure here on the 1 hour, so it was downtrending, where I can move into smaller time frames. If I'm moving too fast, let me know. But here you can see on the 28th, this is day by day, right? On the 28th, market wasn't really moving, but it came down, made low, lower highs, lower lows, lower highs. Then all of a sudden it breaks out, right? It broke structure here. And how do I select what time frame I want to do or set my supply or demand? In my opinion, whatever chart looks the cleanest. Always feel free to send your charts in the chat. I'll let you guys know what I think looks best, because we're all helping each other out. If you guys spot supply or demand, I'll be able to help you out. Can you elaborate on fair value gap? Yeah, I got you. Let me continue on supply and demand. But here, we have our break of structure. We have volume, which would be our demand, our rally, base, and then rally. And then all we have to do is retest. Use the candle that initiated the move on the 30-minute. This one candle broke structure, created demand. And then if you mark, you go from the bottom of the wick to the top of the body close. You don't really have to draw it out like that. You can draw it out like however you want to, as long as that's at the top of the body close for demand. And then for supply, it'd be like top of the wick, bottom of the body close. The reason I use the body is because that's where price close, and the wicks are where price rejects, right? So the volume is going to be on the body of the candle. But here you can clearly see that Tesla bounced off demand, and that's where you would take your trade. You'd set your entry there, target previous highs, set your risk pretty low. Let's see, we'll set it to this previous high there, and then just give yourself time for it to play out. Boom. How would I set my stop loss? Usually by same ways, previous highs or lows. I think on this trade here, I was looking to stop it out at this high here, which is pretty even with this high there. I see a 4-hour inside bar. Yeah, I got you, man. But this is demand. This is super simple. I have a bunch of videos on this as well. Works very, very well. I've been using it for the last 2.5 years. Has never, ever failed me. There are times where, it doesn't go my way, where I do get stopped out. Most of the time I get stopped out is just user error. It's not like the trade didn't work out, but it'd be like user error. So I stop out, but it goes my way by getting faked out. But that happens, and you can't let that get to your emotions. You can't sit there and be like, oh, and then start chasing the trade. You have to learn how to control that, and that's a whole different game. I'll get into the emotions later. Where's the base on Tesla? On the 30-minute, you see the rally here, and then you see it consolidate. On the 30-minute, it doesn't really look like it base out. But if I go into smaller time frames like the 3-minute, you can see where it starts slowing down. So it rallies, and then it bases out right here, and then it rallies again. How do you set a stop loss on Webull? You can set a stop limit order. When you go to, it's like when you go to close your position, it lets you set a price at what you want to sell it at. It's called the stop limit. Will this be posted on Discord? It'll be posted on YouTube yet. Let's see. But this is like the most clear version of demand I could find. And then obviously we're in an uptrending market, so I'm not going to show you guys supply, because why would I show you guys supply or look for supply when we're uptrending? I'd rather not trade for a couple days, wait for my setup to touch. I'd rather not play the downside knowing that it's going to chop like it is here. It's going to be slow on the way down, but the second it touches demand or gets close to a pivot point, that thing is going to rocket, and you're going to make more money than you would have playing the downside in one day. So you just have to be patient and let your setups come to you. Yeah, never fight the market, never fight the trend. Let's see. And then fair value gaps. I'm going to show you guys fair value gaps. So here you can clearly see that market, just started shitting. It started coming down, right? A fair value gap is, in this case, to the downside, sellers control the buyers. On the way up, it's just moving sideways. It's not really moving. It's chopping. But on the way down, it just completely dies. This is the 1 minute. This is what you would use to, trade intraday if you're a day trader. Supply and demand is more like wait for it to happen. It might take a couple days, but I promise you those moves are going to be a lot stronger. This is more like if you're advanced 0DTE player, high risk management, and you're not worried about big losses. Either way, you can make money. I'm not saying either or. The more you add to your arsenal, the better trader you're gonna become, right? These allergies, man. Shit's killing me. But a lot of what I was gonna say. A lot of people fight over what strategies are better. ICT, supply and demand, smart money concept, whatever it is, bro. It doesn't matter. You can't just trade one thing and expect to be a good trader. If you're not open-minded and able to trade many different things, how are you ever going to become, a really good trader? Have you ever tried over-the-counter allergy pills? Yeah, dude, I've taken like 2, but it's not doing much. Usually, right now I'd probably be dead. If I didn't drink this Red Bull and take allergies, I'd probably be on the couch out. But I gotta be up, gotta work, gotta host this class. I'm trying to get y'all right. But let me get back into fair value gaps. So to the downside, obviously the sellers out-controlled the buyers. We broke the low a day here. So on September, this was Friday. I'm Central Time, so my market opens at 8:30, right? Market open, it was slow to the upside, and then we broke the low of day. We started making lower lows instead of making higher highs and higher lows. So we ended up breaking low day. Volume stepped in, and then this fair value gap was created. You can see from this candle here to this candle, these candles do not touch. Every other candle, you can see that they're pretty much close to each other, touching. There's no volume in between those candles. This is how you know that there's volume. These fair value gaps. And you could take trades off of these. So this is double confluence, right? We broke structure, even though this is the first candle of the day. We broke structure, volume stepped in, and then we created a fair value gap. That's where you would take your trade. Boom. So you'd set your short position. And this is all stuff that you have to realize as it's going on, right? This is what my trade would have looked like. I'm not going to lie. I would have got stopped out, closed above my stop loss, target previous lows. If I was playing 0DTs, I would have got stopped out. But here in this case, if you're playing 1 to 2 day contracts, you'd be chilling. A fair value gap is when, a displacement and a fair value gap are the same thing. It happens when it's as simple as this. You don't have to know more than what I'm telling you right here. When it's based off of 3 candles, right? So the middle candle is going to be where the volume is at. If this candle doesn't touch the third candle, that's a displacement. That means there's a lot of volume in this candle there because it just straight died and didn't give itself time to come back up and, retest previous orders, anything like that. Instead, this is where the large volume came in, and this is where the orders are at. So this is where the rest of the sell-off is going to be, because the market can't just straight shit itself. It can't just go straight down. You know what I mean? Banks can't do that. For every seller, there has to be a buyer. And for every buyer, there has to be a seller. Right? So if the market is just straight selling off, there's got to be buyers. Let's see. So that's what, causes stuff to retrace. Let's see. When do you start trading at the open, or do you wait an hour or two or even longer? In my opinion, there's no right time to trade. If the market is moving and there's volume You just wait for the setup, right? So let's see what happens here. Let me give you guys an example of what I would do on a regular day. Let me make sure this is pretty slow. See, market opens up. It's not really moving. I don't see much going on. Oh shit, I see volume, right? I'm gonna stop right there. I see volume. I see it break this lower day. I'm gonna mark that. I see a fair value gap created. I'm gonna mark that. Boom. Now all I'm gonna do, so I have my zone marked. I see that we broke structure. Instead of going up, we broke the lower day. Volume came in, so I know that the market's moving. I'm gonna wait for price to retrace for me to take this trade. So this could happen. This happened at market open. It could happen in the middle of the day, and it can happen at the end of the day. There's so many, different opportunities that you can find as long as you can recognize it, right? So there's no right time to trade. It's not like, I know ICT does this 30 minutes after market open. I think he calls it the silver bullet. 30 minutes after market open, and then an hour from there. If there's no trade in between there, he doesn't take a trade, which is a good rule because volume usually dies out after about an hour and a half, right? So now I'm just going to wait for price to retrace. Boom, 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 boom. It's gone. Almost there. It's currently 8:50, 8:55. This is going into 30 minutes after market open. And then boom. Once price start getting close to the zone, I'm in. This is where I would enter my trade up here. Stop with the close above my stop loss. I had it above this little low right there. And then I just wait for it to play out. If I go into a larger time frame, it's going to clear up. Once you enter the trade, you can enter larger time frames, and it's going to help you out a lot more. Boom. Simple as that. Is this what they call backtesting? Yeah. Let me backtest a trade that we took on when was it? Thursday? When was Thursday? This is the 1 minute. This is the 31st. Boom. Where was the trade at? Gonna have to find it. Here it is. That was on the 30th. All right. Let me move back to that. This is one we caught live, right? This is how simple it can be. This is on the 1 minute, right? We're currently downtrending, making lower highs, lower lows, lower highs, lower lows. Boom. And then we break structure here, right? This candle right here breaks structure. We break these previous highs. It doesn't matter. It doesn't have to look perfect. It doesn't have to look clean. Every candle has a high and a low, right? These are highs and these are lows. This candle here breaks structure. And then I see a fair value gap, the most minuscule fair value gap ever. But what is a fair value gap? Indicates volume. Then you could also tell by this candle here. You can see that it tried to come down and then it wicked up, and the next candle opened up, barely even bottom wicked, and just broke structure there. So that was the fair value gap. We entered as it was coming back down. We entered on that fair value gap, and boom, we banked. I think we made 70-80% on that trade. I made about $800 last Thursday, or $500 something. I think I took another trade and took a loss. We can back test several different trades. Let's go into a smaller time frame. Look, even though we're waiting for demand, you could have traded the downside on this too. Because I know I saw a fair value gap retest on Tesla as well Friday. So market opened here, right here on this candle, this 1 minute. Automatically, you could tell volume is in, whether it's to the upside or downside. You just have to react. We don't wait. We don't predict the market. We react to the market, right? So in this case, it tried to come up, immediately shat. It broke this low here. Boom. You see this fair value gap created. It doesn't matter when it's created. It could be the next candle that it retests. Fair value gap created there. You get in on the retest, and then obviously it just continues down. Boom. In cases like this, you don't necessarily want to hold all day. Don't be greedy. Take your 10, 15, 20%, and I promise you do that every single day, you're going to be making a lot of money. There's a member named Zaim in the Discord. He's been taking his 20% for the last month. First few days he was making 100, 200, 300 bucks. This last, I think, week alone, he made $10,000. Like, it's insane how fast you can make money when you just take your 10, 20%. The reason I say that, and you guys hear this analogy all the time, you can have $1,000, make 100%, make $1,000. You can have $100,000, make 1% and make $1,000. Having more money does not make you a better trader. It's all about risk management. How much money do you put in a trade to earn a lot of money? I personally put $1,000 per trade, but I only trade on a $5,000 account, right? That's because I'm willing to lose that amount of money, right? So it depends on how much money you have. I never recommend putting more than 10% of your worth, right? So if you have $5,000, put $500 in an account and use that account to make money. Stop trying to flip accounts. I'm tired of people telling you guys, throw $100, make 5, 10, 15%, just keep flipping it. How are you gonna make money if you don't withdraw that money? If you're just trying to, grow your account, how are you making money? You could be profitable, but you're not profitable if you don't take that money out and use it. For what? What are you trading for? Are you trying to make money, or are you trying to get a screenshot? What are you doing? Like, you know what I mean? Use your account to make money from it. Withdraw daily, and I promise you that's going to help you with your risk management. Say, for example, I trade on a 5K account. I lose $300. Oh, no. Let me do it this way. I make $400. Next day I use I withdraw that the next day. That same day I make $500. I'm up $900. I withdraw that the next day. I make another $300. I'm up $1,200 now. And then the next day I lose $200. So now my account's at $4,800. Did I technically lose money? No. Yeah, you can report your losses as a tax write-off, but only up to $3,000 per year. You know what I mean? I technically didn't lose money, and I'm technically not unprofitable because I've been withdrawing my money. My account's just under margin, so I'm not profitable until I get back over 5,000, right? But withdrawing daily is going to help your risk management and everything else so much more. As long as you're taking that money, it doesn't matter what account size you have. Just keep withdrawing and making money from your account. Stop trying to grow your account. You're not going to turn $1,000 into $100K. It's just not going to happen. Unless you were super lucky in the crypto bull run, this or that. I promise you it's not going to happen. It's super unlikely. I turned $200 into almost $40,000 with Dogecoin. I've never done it since then. And I know I'm probably never going to do it again because I don't know when the opportunity is going to present itself. Nor do I know what is going to make that happen. You know what I mean? Very, very, very hard to do. Very unlikely it's going to happen. And by the time you do, hit a home run or, hit a miracle or hit the lottery, you're only going to break even. At that point, you're gambling. Use your account to make money from it. Stop trying to grow your account. Make money from your account. Super, super important. I just went on the rant, but you guys have to know that. I have to put it in your heads because a lot of people tell you just use whatever you can lose and try growing that. You do that, you put $500 in your account. You lose all that money, you're going to put more money in your account. You're not supposed to do that. Put $500 in your account, trade with $100, and I promise you, actually, do this. If you have a $500 account because that's what you're willing to lose or that's what you're risking, trade with $50. If you would have had $250 in a trade, trying to make 50%, $125, it's going to be a lot harder for you to hold because you're going to be scared of losing that money. This is proper risk management. You're going to be scared of losing that money. How many trades do I take a day? Maybe one or two, nothing more than that. If you trade with what your loss would have been, say you put $250, your loss is 10 to 20%, 25 to $50. So say your max loss is 20. Imagine you put $50 in a trade. You lose 10 to 20%, you lose 5 to $10. You're not losing shit, right? But say because you're not scared to lose those 5 or $10, you're gonna be holding your trade a lot longer. You're just gonna be sitting there like, oh shit, like this shit's boring. Trading's supposed to be boring. You're gonna walk away. You're gonna come back. You're gonna be up 50%. You're gonna be up 100%. You're gonna be up 150%, 200%. There's a reason you see so many screenshots coming from the Discord of them making 300, 400, 500, 600%. Why? Because they go in with small position sizes like 50, $100, $200, $250, depending on what their account size is. And those $250 turns into $1,000, $1,200, $1,250. That's how you're supposed to trade. That's how you're gonna make those big numbers. It's by playing with smaller size because you're not scared to hold those positions. Yeah, don't make impulsive decisions. If you're chasing a dollar amount, I promise you, you're never going to get there. You're never going to be making the money you want to make if you're chasing money. How are you supposed to make money if you can't be a good trader, right? Super, super important. And this is what's going to get you there. Do you take the time to look at Greeks before taking a trade? I do not. If I'm playing 0 DTEs, Greeks don't even matter. You shouldn't be holding your position longer than like 10, 15, 20 minutes unless you get large volume coming in. Say like the 15 minutes shits itself like here or there. You'll probably be up 100% within minutes, right? So you shouldn't hold longer than that. After that, it's just greed. But no, I rarely ever look at Greeks because I day trade. If I'm swinging positions, yeah, I'll look at theta. But you also have to understand, as long as you understand how it works, right? So SPY has 0 DTEs, so the contracts are going to be worthless at the end of the day. Yeah, the market's closed tomorrow. They're going to be worthless at the end of the day. So obviously you don't want to hold all day. And you don't want to hold for longer than an hour because they're going to be losing value throughout the day, right? So those are meant to be scalped. 0 DTEs are meant to be scalped. You cut them, you're in and out, boom, super quick, walk away. 1 to 2 day contracts, they're going to move a little slower, but you can hold maybe an hour or two before they start losing value, right? So if the market's not moving and you still want to take a trade, play 1 to 2 day contracts. It's all about understanding how they move, right? That's like SPY, like 0 DTEs, SPX, stuff like that. So understand those concepts. Now, with Tesla, Apple, Meta, any other stock, right? They're gonna be weekly contracts. So there's weekly contracts, 1 week contracts, 2 week contracts, 3 day contracts. Every single day that you hold a contract is gonna lose value, right? So knowing that concept, why would you hold more than a couple days, right? And the closer it gets to the end of the week, say you have weekly contracts and it's Monday. The closer it gets to the end of the week, by Thursday, those contracts are going to be moving like 0 DTEs. They're going to be looking like 1 day contracts. Why? Because there's only 1 day left in the week. So understanding that concept, You could size up on Monday and play weekly contracts because they're gonna move a lot slower, right? And then on Friday, you're gonna have to size down because they're gonna be 0 DTEs. So as long as you know what day of the week it is and what contracts you're buying, you should be good. But say it's Friday and you buy next week contracts, then you don't even have to worry about it because now you have a week and a day. You know what I mean? So it's all about understanding how they move and what day of the week it is. It's not really super important, nothing crazy. I rarely ever look at gamma or delta because I set my targets based off previous highs and lows. So here in this case, you know, we have demand. We break structure here. We're obviously in an uptrend, and we create demand. So volumes to the upside. My target's going to be up here. And then you can set smaller targets on smaller time frames. So you could trim, you know, at this previous high here. Boom. So there's a high there. See, and there's a high here. So you can set targets like this. Right? So TP1, TP2, and then you can let your runners run up here. Right? So you can set targets like that. But me, knowing how supply and demand works, especially because it's on a larger time frame, the larger the time frame, the stronger the level, you know, I know that this is going to end up breaking previous highs. Right? Because overall, we're in an uptrend. Anybody else would say, what if we go down? Why would we go down? We're uptrending. We already broke structure on larger time frames. You can see that we broke this high here and this previous highs there. So if I mark this here, boom. Let's go into smaller time frames now, like the 30-minute. Like you can clearly see that market's going up. Price is always going to tell you what it wants to do. You just got to listen to it, right? Don't try to predict the market. Try to react to it, and you'll be fine. Yo, just 1 second. Goddamn, we almost have 100 people in here. I currently have more viewers than followers. If you're not following the stream, I would highly appreciate it. Yo, Dizzy69, I appreciate the follow. Alex20, I appreciate the follow. Vic63768, I appreciate the follow. Dev, I appreciate the follow. Ebola Chico, I appreciate the follow. Trexer, I appreciate the follow. B-Roy, I appreciate the follow. Oscar, thanks for the follow. Coach Third, I appreciate the follow. Roblox Raptor, I appreciate the follow. Mink902, I appreciate the follow. I appreciate y'all. Jeezy LSK, I appreciate the follow. I appreciate y'all following the stream. Alright. You plan on sizing up anytime soon? In the future, I do. First, I gotta make more money. Trading obviously makes me so much money. I earn a little bit off Discord. Discords don't really make as much money as you guys, at least not for me. I know there's other Discords that make a lot of money, but I'm not necessarily, you know, trying to, you guys know, I don't really push that too hard. I just let my social media do it, whatever it does. But I know that shit, I have the mindset of like social media and shit, all that stuff could end tomorrow. Like, I don't know when that shit's gonna, you know, whatever. I don't give a fuck about it. But in 2024, this next year, I'm gonna start building homes, right? So once I start making money off of that, like real money, not just like 10, 15K a month. Once I start making like hundreds of thousands, like every 6 months building homes, then I'll be able to size up. Then I'll start using big boy money, you know what I mean? But until then, I'm trying to save up and start, you know, putting my money in smart positions so that way I don't fuck shit up, right? Because imagine I make, like last year I made 100,000, right? Imagine I put $100,000 in my trading account. That's really, really stupid. Why would I do that? Basically, everything I'm preaching to you guys about risk management goes out the window because I don't even follow my own rules, right? So it just wouldn't make sense. But that's when I plan on sizing up. You know what I mean? Do you use LLC account to trade? Yes, sir. You building homes? Yes, sir. I plan on either flipping homes God damn. Woo! But so this is my plan. I could either buy a house and then figure it out from there, or I can, buy a beat down home for cheap, fix it up, live in it for a couple years, collect the equity, and then collect, the renovation, right? So it's two birds, one stone. Or I could just build houses. I could bum it out, live with my parents for like 6 months, or maybe longer, or live in an apartment. Still doesn't matter. But I'm still gonna have to be paying like mortgages and shit, right? So I'm gonna have to be on top of that shit and just build homes. So there's a lot of things I want to do, but I still got time to figure it out. What is LLC? It's a limited liability company. Basically, it's just like tax benefits. There's no real reason for you to have an LLC besides tax benefits for trading. You can also rent out rooms or do Airbnb type shit. Yeah, that would work too. Yeah, bro, these allergies are killing me. But yo, is there anything or any questions you guys have that I can help you guys out with? Actually, hold on. I'm gonna go blow my nose. Give me 2 minutes, man. I'm back. Do I sound more clear? Do I sound better? I appreciate y'all kicking it out. You plan to flip or build a portfolio for passive income? Uh, yeah, bro. Of course. If I start trading with $100, what would you recommend to do? Like options, two, or just wait for the stock to rise when buying in? Uh, if you're trading with $100, in my opinion, I'd save up a little bit more before you start trading, because with $100, there's not much you could do. You could buy maybe 1 to 4 contracts if you're playing 0 DTEs. If you want to play safe, like 1 to 2 day contracts, probably won't be able to afford it. I'd say $250 to $500 is what you'd start with. Yo, what's good, Jay Reap? Good to see you, bro. What do I say to people who say trading is gambling? I don't really say much, bro. It depends on how they're saying it. You know what I mean? Could we start trading as low as 500? Yeah. Hell yeah. But yeah, it just depends on what or how they're saying it. If they're being rude or if they're being like, they're like, oh, that shit's gambling, I don't know why you're doing that, then I just don't say much. But if they're like, isn't it like gambling? Then I'll say, I'll explain it to them. How'd you get set up an LLC account and how was it approved? I use LegalZoom. I paid them like $300 and they set it up for me. Where do you get your news? Oh, if you want news, go to my Forex Factory or forexfactory.com/calendar. Use this link here. Boom. Does the Discord cover the Fair Valley Gap info if Selma joined? Yeah, bro. There's people in there every single day that trade the same way I do, that have been learning. I wouldn't say they've learned everything from me, but they've been learning, or they've joined from beginners and now they're freaking banking. There's this young lady in there that, not too long. I'm not gonna say who, but a lot of you guys know who I'm talking about. The ones that are in the Discord. Please be respectful. Don't call her out. But not too long ago, she was asking, $5 from people, so she could pay bills. And this month, she had a couple days where she made over $2,000 in a day, $3,000 in a day. She pretty much does it consistently, and she does it with very low amounts of money. She starts with like 100, 200, 300 bucks. Like, it's crazy. That's what happens when you withdraw your money and start small again. Do you use liquidity sweeps and supply and demand? Like, are you making those setups at the same time? To be honest with you, bro, I never really use liquidity sweeps. I'm telling you guys, it's possible. You just gotta wait. Not wait, but over time, as you start learning. Yo, EMW Gizmo, I appreciate the follow. As you start learning and picking it up, learning risk management. Risk management is the most important thing. Once you understand the concept that less is more, you're gonna start making a lot of money. Do you use technical analysis? Technically, everything that's on the screen right now is technical analysis. Yeah, man. Alex Eubank, G, I appreciate the follow. Javi, I appreciate the follow. But yeah, I mean, watching me do it live, like real time, you're gonna be like, oh shit, that's how. Because obviously anybody can go to the market right now and be like, oh shit, demand this and that. Like, oh, we bounced off demand. I told you, it works. Anybody can do that. But watching me do it real time, anybody in the Discord or in the premium, Jason, I appreciate the follow, in the premium, sees my charts before they ever happen, right? So I'll send my demand zones, my supply zones, and then we trade everything live. I live trade every single day. But I trade everything live, and then, that just helps you out even more, just being able to see everything. In my opinion, that's the best way to learn. That's why, I charge for it. But all the education is free because anybody could go back, and there's so many YouTube videos that already cover it, this and that. Why do I take the time? Why do you take the time to teach us? It's always been about giving more than you receive. You know what I mean? Ever since the whole Dogecoin thing happened, or the crypto stuff, well, I mean, first of all, I live by you give more than what you receive, the more you give, right? The more you give, the more you receive. So it's just basic life shit. I used to go to church and stuff. I'm a firm God believer. I don't have a religion, but I'm a good person. Deep 53, I appreciate the follow. How long did it take you to see your first profit a month? Because I was so stubborn, and because I was so, I guess arrogant and didn't want to learn from anybody else. It took me about like 2 years, bro, because I just kept losing. And then 2 years also because I wasn't really trading my first 2 years. Well, actually, from when I started trading, it took me 3 months. But from when I started, like the whole getting into the stocks, crypto, all this and that, it took me 2 years. Technically, I was never unprofitable because Dogecoin. But the first 3 months I started trading, I lost like $6,000. And then from there, I learned risk management and then just stuck to it. And then since then, I've been chilling. I love watching your TikToks. You should get active on there. I need to, bro. I've been lazy. I told you guys, I'm not really like into the whole posting on social media shit. I think actions speak louder than words. A lot of people be on there saying, I don't care about social media. I don't care about growing the Discord. Bro, I've been doing this shit for 3 years. I truly do not give a fuck about growing that shit anymore. You only use supply and demand? No. I use supply and demand. I use fair value gaps. And that's pretty much it. So like here on supply or SPY, let me get out of this. On the 3 minute, you see a fair value gap here, right? You could also see it on the 1 minute if I zoom out. Boom. So you see the fair value gap up here. It also checks out down here, so it's pretty much the same. That's what I would trade. Are you journaling, or are you just going through the charts to see your plays to look back on? These are pretty much just trades that happened throughout the week. But these are all trades that we took in the Discord. What's a fair value gap? So it's a displacement. So it's when either sellers or buyers out control each other, right? So in this case, sellers out control the buyers and volume stepped in. It's based off of 3 candles. So look at these 3 candles here. Right? Just these 3 blue candles. They're supposed to be red, but I have them blue. The fair value gap would be the displacement. The gap in between the outside candles. So that would be here. That's the displacement here. Boom. This would be your retracement zone. Especially if it breaks a previous low, or, you know, in this case it broke structure. Because we're going up. I know this doesn't look perfect, but this is a low, this is a higher high, this is a lower low, or higher low, this is a higher high, and then we end up breaking structure to the downside, right? So when you have a break of structure and a fair value gap, this is double confluence, right? Boom. Yeah, fair value gap is an imbalance of buyers or sellers, aka a displacement. So yeah, appreciate you, Jizzy. How to trade off a fair value gap? All right, so basically when you see it be created, you just wait for it to retrace. Boom. So your stop. My stop would be around there. Boom. So then you would just wait for price to retest. You ever use support and resistance? I only use support and resistance for, you know, pivot points. So say, where are we at? So like here I have a support, right? It was a resistance turned support, but I only have them for pivot points. So say we start approaching this support, you know, I'll wait for demand to step in, or, you know, fair value gap, and then I'll get in because it's more likely to reverse around this support. Not, you know, it's not always going to be perfect. It's not going to touch to the cent. It's going to be impossible to, you know, get it down to the cent, but this is where you would mark the area for a pivot point. Retracement is like a minor pullback. Yes, correct. Deep 53, I appreciate the follow, bro. Yo, a few more questions because I'm dying. My throat is killing me. My nose is stuffed. My eyes are burning. I also lost 1K because of the ego, thinking I don't have to learn. Hey, bro, we've all been there, but trust me, bro. There's no ego. Like, what's the best way to put it? I mean, everybody in the Discord knows. I like to believe that my Discord is like the most peaceful Discord. No, you know, no weird shit. You know what I mean? Like no pause, nothing like that. We all support each other. We're all there for each other. Nobody's ever like, oh, you're wrong, I'm right, this and that. There's days where I play the upside and make money, and there's days where other members play the downside and make money. But neither of us are like, oh shit, why are you doing this? Why are you doing that? You know what I mean? There's no right way to trade as long as you know what you're doing. As long as the setup is there, this and that, like we're good. How old do you have to be to open an LLC? You have to be 18. How to stop the habit of revenge trading is tough after a loss. Always try making the money back. Size down. You know, if you take a loss that's heavy and you're like, fuck, like I need to make my money back, you're not gonna, you know, you're gonna revenge trade. But if you size down and lose, you know, a minuscule amount of money compared to your account size, and be like, oh fuck it, I know I'll make it back. I just gotta wait for the next setup. Which Latin are you? I'm Mexican, bro. How do you play the downside? Here, let me show you guys. This is we made a lot of money in 2022, so I gotta zoom out to when we were actually downtrending. Basically demand, but to the downside. Let me show you guys supply, just so you guys know what it looks like. Let me find a good example. Here's a good example here. So here we have stuff. Drop, base, drop. This is a nice move of volume. You can see the large candles. You'd mark the candle that starts to move. So the reason I don't mark this candle here, this red candle, is because look how small it is. There's no volume. This candle, even though it has wicks, you know, you could obviously tell that there's volume there. So you'd go from the top of the wick, bottom of the body closed, give yourself time for it to retest, and then obviously set your stop pretty tight. I'd do the candle open right there, target previous lows. So I would get in when it retests the zone, boom, right? And then obviously it gapped down and went crazy. But that's how you play supply. It's the same way as demand. Have you been hitting the gym? No, I haven't, bro. I'm not going to lie. Ever since I moved back to Texas, I've been slacking like crazy. I've been eating a lot of food, but it's not making up for it, you know what I mean? But I did sign up for the gym like 3 days ago. So I just got to get back in that bitch, you know what I mean? No excuses. When was the last time you played off supply? I think last October, bro. I'm not going to lie. Once we started pivoting the interest rates, yeah, in October, down here. Once we broke structure on like a large time frame, like on a weekly, here, I stopped playing the downside because I knew that we're going to start moving back up. Interest rates started pivoting, right? Interest rates, so we went from 0.25 to 0.50, 0.75, raising interest rates to pivoting. So we went from 0.75 to 0.50 to 0.25 to 0, right? And then obviously now up here, this is when we started raising interest rates again by 0.25, so it came down. And then, you know, I just play the charts, right? But I basically knew that because we broke structure on larger time frames and we stopped raising interest rates so high, I knew that we were going to, you know, start going back up potentially. So this was around the last time I played supply. And I've been playing demand ever since. Interest down equals market up. Yeah, so interest rates are going to start going down. This is how they scare you, bro. Let me give you some game real quick before I hop off because my throat is killing me. Interest rate. This is how they scare you. They raise interest rates and make your monthly payments extremely high, so that way you're scared to buy a house. You're like, oh shit, I can't afford that. But smart people are the ones that buy when interest rates are high and the market is low. So nobody's buying houses right now because nobody can afford the payments, right? Because of high interest rates, even though the houses aren't worth as much, right? But as soon as they start lowering those interest rates and people start buying more houses, what happens? It's going to drive the prices of houses extremely high because now everyone's buying, right? Basic supply and demand. When people start buying and people start running out of houses to buy, the houses are going to become more expensive, even though interest rates are low, right? So it basically doesn't matter what your interest rate is. It's better to buy the house cheap with high interest rates, make those payments, refinance after 2 years or a couple years, whatever, collect the equity because the price of your house is going to be so much more valuable now that nobody has a house to buy, right? So that's how they scare you. They raise interest rates, they scare everyone from buying houses, and then they buy them all up, and then by the time the interest rates are low and people start buying again, the prices of the houses are going to be extremely high. That's just some game. That's why I'm trying to buy a house ASAP or get into flipping homes, because it's only, you know, I mean, that's how you're going to get crazy money. Where do you watch the interest rates? FOMC. I don't know when the next meeting is, but FOMC is when they announce them. But yo, highly appreciate every single one of you. I'm finna hop off. My throat is killing me. This will be uploaded to YouTube, so everything that I went over will be, you know, watchable. You can watch it as many times as you need to. An hour and 5 minutes. I think it was a successful stream. I answered as many questions as I could. I really hope that you guys learned a lot from this. And I'm going to try to do this weekly, just answering questions, going over strategies, back testing, doing whatever. Live trading every single day in the Discord. If you want to join, feel free. I'm not forcing you to do anything. Education is always going to be free. You're going to learn a lot faster in the Discord, though. But, yo, I'm out of here. I appreciate all of y'all. You guys take care. You guys have a good Labor Day. Stay safe. Stay blessed. Let's keep making money. Let's go crazy, man. Appreciate y'all. I'm out of here.